Hello and welcome into my second ICT study session. Today I'm gonna start with a weekly chart on Bitcoin just to get some ideas of how ICT concepts are playing out on Bitcoin chart. So let's begin. First of all, I would like to check how the weekly candle gaps are being closed and opened. So let's observe that. The green ones are the gaps that got closed eventually. Some closed earlier. See, they are shorter in length, and some got closed only much later. On our recent decline in May and June, those old ones from end of 2020 got closed only now, a couple of weeks ago. And as you can see, the red ones are the open gaps. There are a few above us, and there are still a few below us from the October and November of 2020. So just as we've seen that these gaps still might close, and they did close, then it certainly leaves a possibility of more downside for Bitcoin to go down and close these gaps, perhaps even to take out these lows. I would assume that something like that might certainly play out. Close the gap, close the gap, close the gap, range here, fake out up, build the sell side liquidity below these lows and below these newly formed lows, and then the last sweep, take everyone out, and then continue higher to attack the buy side liquidity above us, above every new high. So I'm not predicting it, I'm just entertaining a scenario that this is possible. This is a possibility that can play out. Now on a daily, we're gonna look at the past 2 months range. Once this tragic decline in June happened, we created the first range in between this high and this low. I'm using a range with midpoint and quarter points, 0.75 and 0.25. And it lines up nicely with the high here, the low here, the low here. Again, high at 0.75, low at 0.25, and the price progressed. Now what is interesting about this range is that when we are talking about the news and the media and the Twitter, in the past 2 months, everything looks so bleak and so dark. We have the inflation numbers coming up, which are higher every month, talks about recession and World War III and Taiwan and whatnot. Yeah, and kind of everyone is expecting that the economy is in a very bad shape, and allegedly the market should go down. But they don't. After we made this low in June, we are making only higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So it creates this strange situation when the media, the Twitter, is expecting that things are going to be worse, and the retail trader might believe them and try to short every high, only to be taken out of their trades. Their stop losses are being hunted. So the media is portraying the situation as bad, but the market is going up. On the other side, the other group of traders who might believe in this myth of higher high and higher low, higher high, higher low, higher high, higher low market structure, trend is your friend, might long all this thing up, including now. And once enough people are longing, then the price should reverse and take all these built lows out. So for now, the buy side liquidity was attacked. The stop losses of the shorts here and here and here and here and here and here and here got taken out. So my assumption is that once we created this range, we broke out of it, we made a deviation out of it, back into it, another deviation out of it to take out these highs and back into it, I'd argue that our next destined step is, the next destined move is somewhere down. On a daily, we have this quite large gap formed. On this candle. So far, we didn't tap into it. Now below that, we have the sell side liquidity from this wick. Now, what can we learn from history here? On this candle, we did not create a daily gap. The price moved here relatively low, and we can see it soon on the 1 hour chart. But nevertheless, there were gaps, and they got closed on this candle. There was also a low created here, which was taken out by this candle. Let's move on the 1 hour chart to demonstrate that. 18th of July. From here we started to move relatively quickly, and we left a hourly gap here. And even one lower here. Then this low creates a sell side liquidity. Let's hide this one for now. The price came up and then it went down to finally close these two gaps, and on a little tiny wick to take out the stop losses placed below this low. Then the price reversed and moved up higher. Now we have a situation, well, quite similar to this one, only with larger gap visible on a daily chart, and a sell side liquidity placed below this wick. And the middle of the overall range also here in this area. So what can I expect here? I can expect right now we're gonna move in onto even closer on a 15-minute chart. Where we can see the following situation. In the past few days, from the beginning of August until, what is it today, 4th of August, we were moving in a range. So far, we can see from here we created a high with buy side liquidity, and we arranged, didn't take it out, we didn't take it out, we didn't take it out. So everyone who was shorting here was placing their stop losses above this high and this high. Then we wicked above once, second time, to take out all of this built up liquidity, built up shorts. Now another situation is happening. We created this low on the 2nd of August with sell side liquidity. And since then we created higher low, higher high, higher low, higher low, higher low, higher low, indicating to retail traders that we are creating higher lows, so we are going up. But just as we built lower highs here, this one and this one indicating that we are going lower, this liquidity was taken out before we go lower. Now the opposite might happen, that in this range, the next thing that will happen is that we will take out this low and perhaps even this low. What do we have above us? On this decline, we bounced once, ranged, and we created this order block. This green candle on 1 hourly chart before we created another candle with a fair value gap. The fair value gap is in between this low here, and this high here. So what I am observing, what I would like to see, is that we move up from here to close this gap between here and here, to bounce off of the order block, where I would be happy to enter a short position with a stop loss above this wick, or maybe above this wick, targeting sell side liquidity below this low and below the low next to it. This is one scenario that I'm entertaining right now. I don't expect, if we're destined to go down, I don't expect the price to go above this order block, because we already did it. We already took out the buy side liquidity from all these highs here. This is scenario number one. Scenario number two is a long scenario, that we don't even reach this order block. We go down, we take out this sell side liquidity exactly by as in the first scenario, but then we bounce. Instead of going down immediately, as many are expecting, we might go higher first. So here I'm thinking about a long opportunity. Yes, it will be against the overall bearish trend, but nothing moves down in straight lines. And besides, I'm always employing the stop loss. So maximum what can happen is that I'm losing the amount that I'm willing to risk in every trade. So in this scenario, I'm gonna take out the sell side liquidity of this low and this low, reverse, perhaps create a fair value gap and enter. Here we can enter the trade and ride it up for at least the middle of this newly formed range. It depends how high we go from here, but it will be something like this. Let's get closer to it. Something like that. Middle of the range, perhaps a gap that will be formed somewhere here. Depends how quickly it moves down. And this would be the long scenario. So I have a long and a short trades ready for today's session. And I will keep recording the screen, and once the price reaches certain key levels, I will make some annotations, just as I did in my previous video. Okay, let's see how the price progresses from here. Alright, this looks right now like a 3 drives pattern. 1, 2, 3, with each low being lower than the previous low. Usually this particular setup ends up with sharp move back down like this. Let's see if this indeed plays out. We have a setup for a short. Yeah, the price is indeed arriving to the OB order block, and so far it's rejecting from there as expected. I entered my trade, set the stop loss, set the take profit level. Let's see how it progresses. So far, to be honest, it doesn't look very promising. I was expecting the price to reject from the order block, and so far it gets into it and stays there, which I don't like. Yeah, but let's see how it goes. Okay, I want to look closer on the 1 minute chart. What kind of gaps are we forming here? So my entry was in this candle here. Okay, so we created a low, a high, a lower low. We created this gap here. And on this candle we closed it. So this would be a optimal model entry. Right here at this imbalance point. On my entry I used slightly different logic. My logic was to enter a trade on a premise that order block will act as resistance in this situation. Because on my last session, on my last recorded session, and on previous sessions that I did not record, I had quite a lot of experiences where Bitcoin is not coming back to close that fair value gap. Many instances. It just comes to the level and leaves the level without leaving me a possibility to enter a trade according to a model trade setup of ICT. So what I wanted to try today is to enter a trade just on an approach of my key level. Now, if this level is breached, if the price goes above order block or above these highs and stays there, then I am no longer bearish for this session. Then I think the price will continue to go up to close this gap here, and perhaps also to take out these highs. Maybe it's even reversing. So that's why my stop loss is here, above these highs. Now once again on Bitcoin, it can wick quickly, just slightly, and then reverse. So that's why in this particular case I'm keeping my stop loss slightly higher, giving myself some room. Okay, let's return back to 1 minute chart. And we can see that indeed we close the gap and we start the decline. We took out this previous low, which forms already a market structure shift from bullish to bearish. If we are looking back left on 1 minute chart, we can see that this move completely closed this gap. Now I'm still not convinced that we are ended with this move. We still might wick up to take out anyone who shorted here and placed their stop losses above these two highs. But perhaps my understanding of order block acting as resistance or as support is incomplete. Either I did not identify it correctly on the chart, or perhaps it's just not working that way on Bitcoin or on crypto in general. We'll see. But so far the price is moving in the right direction. It is interesting to notice how on the decline there are specific places from which the price is bouncing. For example, here at least on 1 minute chart, price closed the gap and we had a bounce. We continued to decline, but nevertheless there was a bounce. Then the next one was here. Once again we closed the gap and we bounced. A small bounce, but nevertheless just interesting to observe how these imbalance or fair value gaps are being filled time after time after time after time. If I'm still right with my bearish bias, and that the final outcome of today's session is to take sell-side liquidity below these lows, I think what now might happen is that anyone who entered shorts somewhere here placed their stop losses here and were not taken out. Now, after this high was created, there could be another fake move, because everyone who shorted here placed their stop losses here. After this high was created, they want to lower their stop loss, maybe to this level, maybe even lower here. So what could happen is in the next move there will be another fake move up, maybe to close this gap, maybe to even go higher, to take out all the stop losses before we keep going down. That's a scenario that could play out. Let's see. So this happened exactly as I envisioned it to be. Okay, so the trade now is closed. Here is the short entry. Here is the take profit. So the first low has been taken. Actually, everyone who longed here and placed their stop below these lows is now out of the game. Okay, next question is whether we are going down, taking out this low and then returning into range, ranging more here, or we take it out and continue down without returning to the range. I won't be taking a long from here in any case, but I will keep recording to see how it plays out. So the summary of the second session. I'm doing this summary a couple of days after this session was recorded, because I wanted to think properly about what went right, what went wrong, etc. So what did I do right? Well, clearly I identified correctly at that time the highest point where I could enter the short. So the correct entry was identified, and I also clearly took profits at the right time. Could have been slightly lower. My take profit was approximately here, was below or next to this low here, but I didn't want to risk not to get profits in case price goes just below this wick and reverses and goes back, because I was not sure if the price will take out also this low. Eventually it did. So correct entry point and correct TP level. Now, what did I do wrong? Let's check out. So my premise was that these three candles were an order block, which I marked as follows, like this. Like this. And my understanding back then was that the price should bounce off the lower bound of the order block. So therefore my entry was at 23,059, or slightly lower, as we can see here. But I researched later that the order block is an area where a reversal should occur, and more than that, especially when we have a gap, then we can count. Basically, we can mark the order block just as this last candle, like that, just as a last candle which narrows down the entry, and it also specifically shows that if the price goes above the order block, which should be an invalidation point, then it's likely that it will continue to go further. So I didn't clearly understand how to work with an order block. That was wrong. I did understand that generally order block is a reversal point, but the details of it were not so clear to me. So I didn't understand. Understand, right? I didn't understand how to work with an order block. And subsequently, my risk to reward was quite skewed. Like there is a good reason to have a wider stop loss in the crypto market in general, and well, that's part of my my tests, specifically regarding ICT concepts on crypto. But in general, in trading, I would like to take risk to reward, to increase my risk to reward as much as possible, meaning that if I would enter correctly at this order block, let's say here, and kept my stop loss slightly above this order block high, then my risk to reward would have been increased from about 2.5 to almost 7.5, which is a substantial increase. Now, there are like once I really understand how Bitcoin market works specifically, whether there are those random wicks that are just taking out everyone of their positions, I will know better how to work with that. But if I am already testing the concept, then I should try and trust the premise that the order block, if it is identified correctly, then it should work as an order block and the price should not go above it. So I should use the highest point as an invalidation, bringing my stop loss there and improving my risk to reward. So incorrectly used the invalidation level and incorrectly used the invalidation level and poor risk to reward ratio. Okay, now next thing is, what did I learn? What else did I learn from this experience, from this trade? Well, clearly making a overall plan or annotating the chart from the higher time frame perspective and then going down to lower time frames and annotating what is happening on the chart, how it's happening, why it's happening, like why the price went up here after these highs were formed, and why it's likely that the price will go down when these lows were formed. Now, this annotation clearly helps to formulate a plan, and it helps to stick to that plan. Now, why is that? Well, because once I have a plan, I imagined a scenario that could happen, like this particular scenario, that the price will come into the order block and reject from here. So once this scenario is imagined, if this scenario plays out, then I know what to do. I enter a trade safely without thinking twice. I know my entry, I know my invalidation point, and I know my take profit level. That's it. It's set in stone. So once I have a plan and there is a narrative behind it, I know why, like I know the logic behind it, then it's easy to execute according to the plan and not to be uncertain about stuff. The market could go much lower. It doesn't matter. I took my profits where I thought it's logical to take profits. Now, if indeed the market would go much lower, then probably this is something that I would add to what did I learn today, that I took profits too early, perhaps. But clearly, as I said in the beginning, if the price goes above these highs, then it's very likely that it's going to also take out these highs and continue higher. And indeed, it happened. The price came down, took out these lows and the previous low, then returned into the range, took out these highs, and continue higher. So apparently I did understand the market dynamics correctly here. So it was really clear to me that once the annotation of the chart is created by me, it's much easier to formulate a plan, and it's much easier to stick to the plan. So high time frame analysis and price action annotation helps formulate a logical plan. Once a scenario is imagined, if that scenario plays out, I know clearly what to do. And if it doesn't, if this scenario doesn't play out, then I simply have no trade. It's also a very sound logic. If things are not happening as I imagine them to be, then I don't have a trade setup, because I do not have really a plan for something random that is happening. And if I have no trade, then I cannot lose money on something that I did not analyze, did not plan for. which is a good thing. Sometimes no trade is a trade on its own. So these are the things that I learned. These are the things that I did wrong. These are the things that I did right. And I must say, all in all, it works really, really well to, again, to record these annotations, to think about them after that, to rewatch myself doing this analysis and doing these recordings. It takes a bit of time to process all of that, to come to the conclusions, but it's clearly helpful. Okay, thank you for watching. I'll see you in the next session.